This is the Elliott Wave Traders Classroom. I'm Robert Kelly. Today we're going to walk through a wave counting exercise on KLA-Tencor. It's the California company in the semiconductor business. And as you can see, it has a long history of advancing. And that's the kind of stock I like to look at to consider in an investment portfolio. Something that just has a record of going up. Why not, right? So, this is when the trading started, and we're going to start the count from this low, and we'll work through, and then we won't get into the super detail of this later period. We'll zoom. This is a monthly. We'll go down to a weekly and get a short-term view of this. But we just want to start with the big swings here and come up with what the wave count appears to be on those larger degree waves. All right, so the first thing you do is you look for the largest swings that you can see on the chart. And again, remember, we're using semi-log scale for the price pane. Otherwise, it's going to look like this, and it's much harder to analyze that chart than it is this chart. All right, so all right, we're going to look for the big swings. And to me, they're pretty clear and pretty obvious. That's a big decline. That's a big decline. All right, so we know that this is an impulsive advance just by looking at it. This pullback here did not overlap anything back here. All right, so we're going to be considering these are for wave 2 and wave 4, or both potentially wave 2. All right, and so if you want to pause the video at any point and kind of put your own labeling on your own chart, that's a good way to go through this process. All right, but I will tell you that this looks like a wave 2 for sure, and it's debatable if this is a 2 or a 4. All right, let's consider the possibility, the two ideas. If it's 1, 2, 3, 4, then this would be a fifth wave. It could be 1, 2, 1, 2, and this would be a third of a third. All right, but one thing my policy, my procedure is to go with a more conservative count. And by conservative in this case, I mean calling for less continued price action. So if it's 1, 2, 3, 4, then this would be a fifth wave. All right, if it's 1, 2, 1, 2, then there's still going to be, once this pattern turns into 5 waves, there's going to be some kind of a pullback lasting probably a couple of years. All right, so that there'll be plenty of time down the road, once this particular leg is complete, to figure out if this was a 2 or a 4. All right, so that's for down the road. So the more conservative count would be to call it 1, 2, 3, 4, and have this working as a 5. All right, so here's those labels, and I'm using the primary degree scale because this is pretty good passage of time. The other option would have been to go with intermediate, but I think to call a move from 1981 to the current time frame only a single primary wave is too small. So I think you have to go primary here, and then we're going to label the internals of wave 3. The wave 1 looks 1, 2, 3, 4, and some kind of ugly fifth wave. All right, and then that's a clearly corrective decline. Honestly, it's okay to work on labeling it, but it's really not necessary in terms of where we're going to be using this forecast, this chart, this wave count for the future forecasting. So 1, 2, now we want to label the internals of 3, since they're pretty clearly delineated. I mean, this is just kind of a choppy mess, but this is a little more clear. All right, so that's worth labeling. So if you want to label the internals here, go ahead and pause the video and put your count on. All right, so we have 1, 2, 3 expanded flat with a truncated C, wave 4, and then 5. Now, as you probably know, if you've been a subscriber for a while, I really don't like to count truncated C waves. But in this case, you kind of have to. I mean, there definitely are truncated C waves. It's just that I see people counting them when they shouldn't. All right, but in this case, that appears to be the best count. You just can't really get this to be labeled as a 5 unless you count it like that. All right, so there we have it, ABC truncated wave 4. All right, now let's label the decline in wave 4. All right, and if you want to pause the video, go ahead, and I'll put my labeling on. And it looks to me like we have an initial zigzag there and an X wave advance that ends here, and then another 3-wave decline, ABC, for wave Y. And, you know, it's debatable where you put this X. I'm looking at the E-Waves computer count, and I'll show you that. It's putting it here and calling it an A, B, truncated C. And that way you have a little bit of an easier time calling this an ABC down for 4. All right, so that's the internals of wave 3 and 4. All right, now let's zoom in and count from this low using the weekly chart. All right, so here's the weekly. I think it should be the monthly. Let me change that. All right, so weekly, and all right, so here we have a pretty big decline. First glance, that's going to be a wave 2. All right, and these other pullbacks along the way don't seem to be quite as big as this. All right, so let's go ahead and apply the labels for the 1, 2 within wave 5. All right, which means it's going to be intermediate wave 1 right there, and intermediate wave 2. All right, so that means that you're in 3, and it doesn't look like it's complete yet. All right, so let's figure out how to label the internals of wave 3. That's a pretty clean pullback right there. So that's likely another wave 2 of lower degree. All right, and then there's another pullback there. It's overlapping this high, so it can't be a wave 4. So that's going to have to be another wave 2. All right, so let's go ahead and put those labels on, since there's kind of like not much debate or choice in the matter. All right, we're going to call this wave 1, 2, all right, and then a lower degree 1 and 2. Okay, all right, so that's pretty, you know, not much room for debate on that, and that tells us to look for a third wave peak. All right, and there's a pretty good pullback there. All right, so that's going to have to be a wave 4. So we know that this is going to be a top of a third, and that's a 4. All right, and then within this move here, let's go ahead and zoom in just a little bit here. We'll spread the bars a little farther apart. Let's see. That's going to be a 1, 2 for sure. All right, let's put that label on. Those labels on. And this looks like 1, 2, 3, 4, 5 up. 5 waves from here to here. So that's going to be our 3, just by virtue of the fact that it's a 5-wave structure. And you could try to say, well, it's 1, 2, short 3, but no. 3 would be shorter than 1 or 5. And plus this pattern from this low to this high is in 5 waves. So that's going to have to count as wave 3. And then it looks like this decline here is big enough already as it is to be a 4. There's our 2. All right, and so we have a 4 here. We can go ahead and call that complete. There's no reason for it to get any larger because it's already a fair amount larger than wave 2. All right, so that tells us to expect a new high in 5 of 5 of minor 3. So let's back out and look at the bigger picture. All right, so there it is. So we got big wave 4 low here. We're looking to count 5 up from this low to time the next major top. All right, and so 1, 2, and you're still in intermediate 3. And within that, you got 1, 2, 1, 2, 3, 4, 5, 3, not quite done. All right, so that's saying new high, pull back in red 4, new high, red 5 of intermediate 3, and then another 4, 5. So basically that's implying that this stock should ratchet higher, in a kind of a 4-5 pattern sequence for probably several more years. So that's the kind of stock when you see the potential of an incomplete longer-term wave count, the stock that has a track record of going up. This is the kind of stock that I personally want to try to find a way to put in my portfolio as long as it's in a kind of a near-term uptrend, not breaking down. All right, so let's take a look at the E-waves count, and for whatever reason, the data starts later. All right, so there's a 1, 2 here, and this is our 3, 4. The one I counted it as a primary 3 and 4, and you can see an incomplete third wave. So this could be that would be like the alternate count here to call this 1, 2 and call this another 1, 2. That's possible, but the bottom line is, whatever it is, there should be 5 waves up from this low here before we have a major top, whether it's primary 5 or 3 of 3, kind of as the E-waves count is inadvertently telling us to look at. All right, so let's zoom in just a little bit here and look from this low. So we got there's the one. I didn't go through the internal labeling of this, but 1, 2, not the most beautiful 3. This doesn't count too well, but the bigger picture is pretty clear that that's a correction of this move. So it has to be called a 1 and a 2. And then 1, 2, 3, 4, 1, 2, 3, 4. So the same count as I just showed. All right, so pretty solid count, pretty clear, not a lot of question, at least for the next couple of years. And if I'm wrong, let's zoom in and kind of figure out, well, where would this count start to go off the rails a little bit? As always, you look at, for a wave 4 correction, in case it's not over, you look at the 38%, which is already reached, 629.83, and there's a previous 4th low there, which it reached. So it kind of bottomed just slightly below that little support cluster there, around 629. And this count, what I would say, I'd have to concede would be wrong. If it were to break 618 of the third wave, that's pretty much a no-no. It doesn't really ever see that. All right, so that's 506.46. If it breaks that, then something, this particular short-term count is wrong, and, a larger wave 4 would be underway. But pretty good chance that the low is in and prices head higher from here. All right, let's just, for the heck of it, look at the seasonal chart. My saying, looking at the seasonal chart is kind of like taking a multivitamin. It probably ain't going to hurt anything, and it might help, right? So this is going to be, the blue line is going to be today, and you can see it's in a pretty good uptrend. There's a tiny little pullback until March 31st, within the pretty solid advance seasonally, going back using the old data, into early June. June 5th is that peak right there. All right, so pretty good seasonal period ahead, and the wave count shows that it's a 5th wave up as expected. All right, so we've taken a longer-term chart, longer-term count, and found a good clear wave pattern, done a long-term analysis, and then in turn come up with a near-term forecast based on a longer-term count. So this is how Elliott Wave is done. This is kind of the goal of Elliott Wave, is to identify good, clear patterns and come up with a forecast and levels where your forecast will be wrong, which we just did. All right, and then you take your chances with the market, and hopefully, in this case, the stock would continue to go higher.